The world is currently sitting on $300 trillion in debt. To visualize that number, imagine a stack of $1 bills. It would stretch past the moon and back 50 times. This debt represents 3 times the value of every good and service produced on Earth in a single year. Logic suggests that if borrowing works like a personal loan, there must be a lender on the other side of the transaction. But the major economic powers are all heavily in the red. The United States owes $36 trillion, while China is carrying over $18 trillion. If almost every nation is drowning in debt, the question remains, who is the entity holding all the IOUs? The math only reconciles when we move away from viewing global debt as a straight line from lender to borrower. Instead, the global economy functions as a self-reinforcing circle. To find the lenders, we must look at the world's most indebted country, the United States. Roughly 70% of the U.S. national debt is owed to the American public. The government facilitates this through bonds, written promises of repayment with a fixed interest rate, acting as a highly secure way for the state to borrow large sums of cash. When citizens put money into a bank account or a pension fund, those institutions do not let the cash sit idle. They use those deposits to buy government bonds, essentially lending your savings back to the state. This reaches a massive scale. U.S. commercial banks hold nearly $1.8 trillion in these bonds because they offer a reliable, near-zero-risk way to grow capital compared to the volatility of the stock market. This creates a hidden national network where money flows from inactive savings into active government spending. The government injects this borrowed cash directly back into society to build schools, repair roads, or manage crises, such as the $3.8 trillion borrowed during the COVID-19 pandemic. This spending keeps businesses earning and workers paid, which drives the expansion of the entire economy. As the government pays interest on its debt, that money returns to banks and pension funds, leaving the lenders with more spare cash than they started with. Lenders use interest payments to buy more government bonds, restarting the cycle. This scales globally as countries like Japan, the Netherlands, and Brazil park surplus savings in U.S. debt for fixed returns, linking their economies into a massive international network. Global debt functions as an interconnected vascular system, circulating money from savers to borrowers in a cycle that spans across every border. If governments spend everything they collect just to maintain growth, they face a problem. How do they pay back the original loans? In practice, they issue new debt to cover the payments on the old debt, ensuring the money never actually leaves the system. Halting this cycle would immediately withdraw the flow of money that businesses and workers rely on, leading to widespread failure and job losses. We saw the consequences of a sudden stop in 2008, when investors stopped buying Greek bonds. Without new loans, the Greek economy contracted by 25%, resulting in a 30% drop in wages and the firing of 1 in 4 public workers. Because a sudden stop guarantees immediate collapse, governments continue borrowing to maintain the very floor the economy stands on. This entire machine relies on trust. Lenders must believe a government is stable enough to eventually pay them back, which keeps interest rates low. If that confidence breaks, lenders demand higher interest rates to compensate for the risk, making it impossible for the government to afford its old payments. To avoid an official default, some governments print more fiat currency to cover the gap. Flooding the system with new money triggers hyperinflation, destroying the currency's value and wiping out life savings, as seen in Venezuela during the late 2010s. When the debt loop fractures and trust evaporates, investors flee toward tangible assets like gold that sit outside the fiat system. Perpetual motion sustains the modern global economy. This $300 trillion debt functions as the system's engine, with every nation and citizen acting simultaneously as lender, debtor, and passenger.